Hi, I'm Chris Moore, your Century 21 Realtor and Numbers Ninja, and welcome to this month's market update. Home prices are still high and remaining stable, which is good news in most sense as it relates to our market value. Houses are still selling relatively very fast, and the inventory is still low. So let's look at the impact that that's having on our local market. Let's jump in. The average sales price across Oklahoma City MLS is $301,000. This is up 4% year over year. And it's interesting to note that that number is for the first time really moving past that 300 mark when you look at the entire Oklahoma City metro. Some of the submarkets have been beyond that for some time, but for the entire metro, it's moving past the 300 mark. That's noteworthy. The average days on market right now is 22 days. The median is 7, so the fastest homes or the best homes are selling in just 7 days. This speed of sale is about like what we were seeing when the market peaked last June. So we still have high prices, selling quickly. Next, let's look at list to sale price ratio. The average list to sale price ratio across the Oklahoma City market is at 99%, or you could say there's a 1% negotiating margin right now on average. Compared to this time last year, we were actually at 101%. So this time last year, on average, people were spending 1% over the list price. Now, you might see negotiating as far as 1% below the average list price. In our market, we still have low inventory. We're at an 8-week supply. And this is really similar to what we saw at the market peak a year ago when we were at a 7-week supply. What I'm seeing in day-to-day business is that if we had more good listings in the market, we'd be selling them. If we had more good listings, we'd have more transactions. Speaking of number of transactions, year to date, we're down 22% across our Oklahoma City MLS compared to last year. Now we're gaining some ground because in January, when we started out this year, we were 28% down compared to last year. Now we're at 22% down. So again, if we had more good listings, more viable listings, we'd be selling them. It's not that buyers aren't buying right now. It's a combination of market effects, including the interest rate, but probably not in the way that you think. So right now, interest rates are in the range of about 6.6% to 7.25%. And it's more complicated than ever before what rate you'll actually get based on your qualifying factors. That means how much debt you have compared to how much income you have coming in each month. It's based on credit score. It's based on so many more factors than ever before. And so interest rate, though, like I mentioned, it's not holding up buyers. The way it's affecting our market the most right now is that people who otherwise would be selling a home, people who would be selling, are hesitant to do that if they're sitting on a really attractive interest rate. If they have a house that they think they might want to sell, but they're at 3.5%, they're reluctant to sell and get into another property where they're going to be at 6.6 to 7.25%. So most people think of interest rate and they think, well, that's slowing down the buyers, but actually what it's doing is it's causing hesitation for sellers that would normally be coming into the market. Again, that's slowing down the listings coming in. That's what's causing the reduction in transactions this year compared to last year. Thanks for joining me for this market update, and be sure and tune in next time as we take the market and break it down.